はい、皆さんこんにちは。私はマネックス証券のハッチこと岡本平八郎です。今回はアメリカの株式市場でバリュー投資家として非常に有名なマリオ・ガベリさんとのインタビューを行い、マリオさんにいろいろとお話をお伺いしています。英語の勉強にもなると思います。参考にしていただければ幸いに思います。Hello, Mario. It's an honor to meet you again, and thank you very much for doing this interview for us.
Thank you, Hutch, and it's my privilege to be included and talk about my favorite subject, which is investing long term.
Great. You know, Barron's once listed you among the world's greatest stock pickers. How did you become interested in the world of stock investment and later became one of the greatest stock pickers? Can you please share some of your success stories?
Yes, of course. I was 11 or 12 or 13 years old, let's say 12 years old. And I wound up going to caddy, that is work on a golf course. A year later, I went to a different golf course. The first one I went to in Westchester County in New York State, in New York, was called Wingfoot. I then went to another one called Sunningdale Country Club. And when you caddied, the individuals that would come and play golf after 4:30 would have worked on the New York Stock Exchange. They were called specialists. And so, you know, this is 1950-ish. And so they would come up and I would be one of the few caddies still there. And they talked about their job, which was the stock market. So at the age of 13, I started buying stocks with the money that I made. And I would buy companies, and I still know the names. So, you know, Beach Aircraft, Philadelphia and Reading Railroad, Pepsi Cola, IT&T. And Pepsi and IT&T are still around.
Do you remember how much money are you making as a caddy back then?
Yeah, you don't want to know. In US dollars, $1.50 per bag, 2 bags, $3. Okay, you know, I can convert that to yen for you, but you can do it very easily on your own. So then 2 years later, it came up to, you know, $3 a bag. But this is the 1950s, and that was, you know, I was able to secure enough money to buy stocks, and I then did that in high school and in college and in graduate school.
Okay. Can you please share your few of your success stories?
Well, that's a good point. What happened is that I graduated on a Friday from Columbia Business School in New York. I went to work on a Monday at a firm called Loeb Rhodes, which then became parts of Shearson, Lehman, and so on. So when you were at Solomon Brothers, I had left that firm because it had already merged Lehman into Lehman Brothers. I started following the auto industry. I followed farm equipment. I followed the business service companies. And at the time of the 1960s, I followed what they call conglomerates, companies that had different business cycles. My first trip to Tokyo was in 1981, maybe even sooner than that, when I arranged a trip for the auto analyst of New York to go visit with auto companies in that, and also obviously went to Kyoto for other reasons. So that was it. And from a successful point of view, I then started following the entertainment industry. So I would follow companies that made movies. I would follow companies that did music, and I would follow companies that had broadcasting. And so during the 1970s, I was already picking stocks that worked extremely well, like in the auto industry. I'm still recommending some of those stocks, like I will talk tonight about Genuine Parts. They sell parts for cars on the road. Then in addition to that, I was able to start looking at how inflation helped the growth rate of companies. So the 1970s was a time in which interest rates went up sharply. And so as a result of that, how can you find companies? Hutch, how can I find companies that allowed their earnings to increase faster than inflation? And so even though the multiples of companies were 3 or 4 times cash flow, you still made significant returns. So that was the good fortune about looking at an industry as an analyst and following that industry on a long period of time. So even today, we follow the auto industry. So we have conferences on the auto parts industry every year in Las Vegas, 46 years. We follow pump, valve, and motor companies. You know, how do you move water from point A to point B? How do you do automation? How do you find robots on the assembly line? And what companies do that? The second thing, Hutch, is that until the Berlin Wall came down in November of 1989, November 1989, before that, we'd visit companies around the world, but we didn't invest in them. But when that occurred, we started investing globally. So we would look at companies like Sony. We would look at other companies on a global basis in the industry that we had knowledge. So that's us. And those are the successful, stocks that we had and why we were successful, because you had accumulated knowledge on an industry. So you knew, for example, you went from cars with spark plugs to cars that are EVs and so on.
Okay. Can you please explain your private market value with a catalyst concept? And I also have a follow-up questions, if I may continue. Does PMV tend to go up and down as economy fluctuates? If the economy continues to keep going, can PMV keep going as well? Hence, you keep owning the stock longer than originally expected.
It's a great question. What happened was the following. Somewhere in the 1970s, stocks were selling. Nobody wanted to have stocks. The headline of some magazine said, the death, D-E-A-T-H, the death of equities. So I had to pay my expenses. So when I started the business, there were only 3 or 4 of us. And then we grew the business as well as making money for the client. And that's how we grew the business. But I would convince people that who would buy a publicly traded stock and how much would they be willing to pay for it? So at the time, there was called leveraged buyouts. So I said to the world, if you took a public company that was trading on the New York Stock Exchange and you took it private, what would the value be what would the buyer be willing to pay to take a public company private? And that became what is called a private market value. And I'll get to how I determined that. The second part, Hutch, was the following. Why my clients, with inflation when it was in 1979, you could buy a 10-year government bond, U.S. government, at 14 7/8. Okay, so what kind of return would my clients want to earn for not buying a government bond, but buying shares of a public company? And so we needed a catalyst. So what happened if the government changed policies? What happens if the founder of the company no longer is there and dies? What will the family sell the stock? What happens if somebody's buying all of the companies in an industry because they think their outlook is promising? So the catalyst was important so that I could make a return for the clients 2 or 3 years later. So what is a company that's public? What is it worth if I buy it? And how long will it take? Now, you asked the question of how did I determine that? At the time, the buyer was what they call leveraged buyout. Now they call it private equity. How much would a private equity firm pay to own a business? So you look at how much they promise their investors. So if you're a company and you promise your investors a 25% return, how do you calculate that? So what you do is you say, okay, if I buy a company at 8 times EBITDA or CapEx without much CapEx, can I sell it 5 or 7 years later at 8 times? And if I can do that, how much can I extract in dividends? And what happens? So you have to understand the interest rates 5 years out. You have to understand the markets 5 years out. So we start thinking about how much debt can I put on? What are going to be my taxes? And what is my cash flow? And so that's what we did. And we're still doing the same thing today. And that's why it became very hard when companies are selling at 12 times EBITDA minus CapEx. How can you be sure you can maintain that multiple 5 to 7 years? So in 2021 or 2020, when you had Wuhan, and today when you have the dynamics of Russia, what are the private market values of companies 5 years out? And the multiples are coming down, so it gives you more alternatives to look at.
Is it correct to say finding catalyst is the most difficult part, or am I wrong?
No, the most difficult part is the ability to look in today's world. When you grew up playing on, games like Fortnite, World of Warcraft, and you do everything quickly, the time frame of an investor is next day. And so what you think about is what happens to money 3 to 5 years out. How much money do I, as an investor, want to have 3 years, 5 years, 10 years out? Why do I need that money? And this is an individual. Pension plans have other reasons. Endowments have for retirement systems like state retirement plans have other needs. So you start asking yourself, if I buy a company, how good are they at protecting the cash flow during an inflationary period? What if there's no inflation? And how good are they growing that, and at what rate? So those fundamental questions are always the same. And, that's what we do every day. And we look at lots of companies. I now have 30 or 40 analysts. The second thing is that when we look at companies, we don't look necessarily at Germany. We don't look necessarily at the United States. We don't look necessarily at Japan. We look at industries. So, for example, whatever you drink, wine, water, beer, soda, anything, anywhere in the world, we want to follow it. So I have an analyst in Tokyo, in your building. I have somebody in Shanghai. I have somebody in Europe, 2 in London, 1 in Milan, and obviously several in the States. So we follow companies like Remy Martin, like Pernod. So we would go to Paris to visit them. Suntory is located in Tokyo. We would try to visit with them. Or the analyst that's there would go, Mitsu would go visit with them. Or in New York. And then they come around the world. So we follow companies, whether it's beer, wine, water, or soda. Another simple example, Hutch, if you watch something in the movies, on your streaming television, or on your whatever application you have, we follow the companies that make the content, the movies like Sony. We follow those that distribute it. So when you look at changes in the world, like in the case of music, what are people willing to pay to have a streaming music like Spotify? And then who sells them the music? There's a company in Paris called that we follow, Universal Music. There's a company in Tokyo, obviously, Sony Music Group. There's a company in the United States, Warner Music. And I was just with Warner Music the other day. And so we look at that ecosystem, and that's what we do.
Can you please give us a few examples of PMV with the catalyst that you're currently investing and how you value them?
That's a great question. I would prefer that I try not to give you really tiny companies, okay? However, the smaller companies in the United States are the ones that have been ignored because they're not in an ETF, electronically traded fund, and the number of analysts like me that do research and when you were at Solomon Brothers, they were a lot of analysts. Now there are fewer of them. So these are ignored and unloved. So these companies, give you an example, there's a company in the United States that sells, if you have a car and you, a RAV4, Toyota RAV4, you have a tailgate. They make the tailgate for cars in the United States like Tesla. The stock is selling at $20 a share, US. There are 4 million shares. So $20 times 4 million is $80 million US. What you do is you go and say, okay, how does the management in an inflationary environment price their product? How do they anticipate increases in interest rates? How do they pass along? Do they understand LIFO accounting? I don't want to get into these details, but LIFO and FIFO accounting. This particular company has operations in Asia and in Europe and in Mexico. What happens? What did we learn because of Wuhan, the COVID? We have to shorten the logistics. And so when we look at their earnings 3 years out, in the United States this year, you will basically produce 13 million cars and the world will produce about 75 million. 3 years from now, assuming the world is still with us and certain assumptions for the economies of the world, we're going to produce 85, 95 million cars. Some of them will have these tailgates, and this company is one of the big producers of that. The second part is that they also make the key on a car. So even though you may go with an iPad to try to unlock your car or an iPhone, whatever, most of the cars in the United States, 285 million of them, have a little key that's an electronic key. They don't twist it anymore. So it's called a fob, F-O-B. This company has made all of those, along with a company in Germany. That business can generate significant recurring revenues because at some point a management team will come along and say, okay, will you pay me $2 a month of subscription so that the next day, if you lose it, and give me your card number and you're online, I will email it, I will FedEx it to you, or UPS, or get it to you. So what am I getting at? This company will earn $8 a share in 3 years. And if they do what I'm suggesting, they will have a higher multiple so that they can sell it 10 times. If they sell it 10 times the $8, that's $80 stock. So it's going to go from 20 to 80. So I can make 4 times my money. But short term, it's not going to do much. So you look at that as a small piece of your portfolio and you add lots of names. So this is how we look at private market value and the catalyst. Now, the company has only been around 20 years, but it was part of another company and it was spun off under financial engineering to the shareholders, okay? And that company was called Briggs & Stratton. So they're located in industrial America. It's called Milwaukee. And Milwaukee, Wisconsin. So that area between Chicago and Milwaukee has a lot of industrial companies. So that's what we do. That's an example of a tiny company and private market value. Another one that's bigger would be Paramount, the movie company. So and I can go through all of that as well, if you want.
Yeah, please.
Okay, the Paramount, the symbol is PARA for the stock. The voting stock is PARAA. There are approximately 650 million shares today. So the stock is, let's say, $22. And so $22 times 650 gives you a 13 or 14 billion equity value. They have $12 billion of debt. So if we buy the whole company together, today we'd pay $26 billion. They call that the enterprise value. What do I get for that? I get a company. In fact, this is what I'm reading. Okay, Variety, which is an industry trade magazine. I'm also reading something called Billboard, and that's the music industry. Okay. By the way, I also read things like Consumer Reports. This year, Nikkei. Bottom line, you read a lot. Independent of all of that, they are making content like what is very popular in the United States about the Western United States and the culture of the cowboys, and that is Yellowstone. But they have lots of content that they have made, and they're, in the movie business, Sony, and they have tried to partner with each other years ago over the distribution of their content. And so then you have what is called direct streaming. That is, you go directly to the consumer. Now, all of these companies like Netflix, Disney, Sony, Comcast, which is Universal, are putting money into content to go after the consumer. As a result of that, that money is building up product, and they're trying to sell it, but to get customers, they're losing money. So I think those losses are going to peak out 2 years from now. So we do a calculation. How much is the content of the business worth, and so on. And so that's how we do it. We come up with a value 3 years out of about $60 to $80. $60 a share. On at that time, there'll be 650 million shares. There'll be $40 billion. Debt will be down to about 10 billion. So then I look at who could buy them. Disney has a $200 billion market cap. They can't buy it because of antitrust. Comcast has a $200 billion. They're a cable distributor as well as ownership of NBC Universal. Sony is not going to want to buy it. But then you step back and say, what about Apple? What about Amazon? What about someone else that's trying to get into this business? And so you can have lots of buyers at that valuation because it's not expensive, and they have the content, and they will have a significant global presence. Okay, so that's how we think about a company. So we go visit them. They're located in New York. We'll go see Warner Brothers Discovery, which is in New York. And we have a team of analysts, 3 of them, that cover various parts of Sony. We go to Paris to visit with Vivendi, which owns the music company and also is involved in content. And then we look at other companies like Apple and Amazon, and we have teammates that cover that as analysts. So we constantly keep track of the dynamics. But you have to be patient. Short term, it can go down a couple of dollars.
Right, right. What would you say is a average holding period of your investments?
That's a great question. We have owned Genuine Parts, a company that I started following we've owned it for 50 years.
Wow.
Kikkoman, I've owned for 30 years. Okay. Sony, I probably have owned on and off. And what I do is if it gets to be 4 or 5% of a client's portfolio, we trim some back. And secondly, there are times when the stock gets ahead of itself. For example, last year in Paramount's case, there was a short seller that got squeezed, and the stock went from $30 to $90 in 4 weeks. So you have to you're sensitive about taxes, and so you're careful about if it's a tax-free account like a retirement plan. Then I don't worry about taxes. But we will sometimes trade around positions. But the basic idea, like Berkshire Hathaway, Warren Buffett went to Columbia Business School. Every year we host a dinner for value investors in Omaha for the last 17 years before his meeting. So we've owned Berkshire Hathaway since the 1980s, and we still own it. Now it's not as cheap as it was. A lot of our companies, on the new ideas, we look for other forms of the catalyst. Can companies spin off a division? Do companies merge with other companies? So companies are buying or selling each other. And you're seeing more of that. Now, why did Buffett go in and buy, stocks in all those trading companies in Japan? And so is he a catalyst for that? Okay. So those are the things we think about all the time.
Mario, since this is a very interesting story that you are sharing with us, can you please give us one more name, very American, not international?
Yeah, no, that's a great question. Let's go about, there are 285 million cars on the road in the United States. The last 3 years, the United States sold about 13 million cars. But the car population is now 12 and a half years old. So when I buy a car, for the first 2 or 3 or 4 years, I will take it back to the dealer and he tries to buy parts. When I take a car to a mechanic to repair, or if I try to do it myself, which I don't, by the way, I don't do it. But if somebody goes to a mechanic, they have a car in there, they need a part that day. They don't know what car is coming in. They don't know if it's going to be a 1987 car, a 2007, or 2015. So these companies that supply parts like that are still valuable. The electric car in the future will hold fewer cars. But in the year 2030, there'll be in the United States 330 million cars on the road because they're not scrapping them as quickly. Only about 15% will be electric vehicles, okay? I actually have the hard number later. But the point that I'm making is there's one company called Genuine Parts. The symbol is GPC. The stock is $170. There are 140 million shares. So you multiply 170 by 140, you get the value of the company. A great balance sheet. They will earn close to $9 a share next year, up 10% or more. And when prices of parts go up, the vendors sell it to them and they maintain their gross margin. So the gross margins may grow up or units volume with constant, what they call mix, same number of batteries and same numbers of brakes and so on, of 2% a year, but prices will go up more so that the expenses for SG&A don't rise as fast. And a huge cash generator. They pay a nice dividend. They've raised the dividend now for 60 years, every year. And the balance sheet's good. Now, the concern you have is the price of the stock too high. I think that over the next 10 years, they'll do extremely well. The second business they have is they have been moving into Australia and New Zealand to sell parts of cars in that part of the world, and Europe. And those have been a little choppier because of the currency. So we have to assume that currencies moderate in terms of drastic changes down the road. Either way, this company is a very interesting one. It's not a large company, it's a small company. It's a mid-sized company, okay? But they are a leader in the field. If you see the stores in the United States, they're called NAPA, National Auto Parts Association, NAPA. And then on top of that, they make parts for industrial equipment. So if you have a business and you need a part for your manufacturing, they are one of the emerging leaders on selling replacement parts for individuals with factories. So now that we had COVID and the logistics of bringing supplies from around the world have had a question mark, you're starting to see some emphasis on certain critical components. And part of that is that, we worry about what happened in Russia. And that is an element that we think about when we start examining, the Chinese one country policy. And you have to be, those are the elements that go into the thought process.
Just to confirm, can you please give us a ticker symbol of the first company you mentioned?
Yes, it's called Stratic, STRT. That's a tiny company, though. You can't buy at the market. You got to put a bid in. Although you have to be patient. If you buy something at $22 instead of $20, you've already given up 10% return. Do not buy at the market, okay? And sometimes the stock trades very small. So when I do this for my clients, we are very patient, even when you buy stock and hold it. And the stock market goes up like today, okay, because of misinterpretation of what Powell was going to say. So that's what we do. And in fact, another place that we own stocks, and I'll mention it, is that people have been buying private airplanes. And some of them are made by a company called Textron, TXT, in the United States, located in Providence, Rhode Island. But their factories across the country. And they make the longitude and the latitude, the Cessna, CESSNA, and private aviation is still very strong on a global basis. If you buy a plane right now, you can write off 100% if it's for business. In addition to have good earnings, the company makes helicopters. And so the notion of Bell helicopters are also used for commercial aviation. So that's another domestic play. And when you hear about Boeing getting an order from India or Airbus, those big airplanes, they sell parts for commercial aviation as well. And it's a good business with good management and a reasonable price. So the stock is selling around $70 a share, TXT on the New York Stock Exchange. And it has about 205 million shares. They're buying back stock, they're paying dividends, a decent balance sheet. So those are the kinds of things we look at. Good companies with good management, good values, okay? And at some times in the cycle, though, you buy companies that are not as good, well managed, but an okay business, but somebody else will come in and buy it. And that's another called activist approach to investing.
Thank you. Very, very interesting. Now, about value investment, I think if you are a value investor, it is difficult for you to invest in a company with new innovations such as Tesla because it's highly valued. So what do you do with a company like that? You just avoid, or what do you do?
No, there's what happens is the following. Companies that we follow create their own internal research and development. For example, the defense spending on a global basis is rising substantially. If I told you that we're going to have electric airplanes that can fly in lieu of 4 passengers in lieu of cars, you're not going to buy it. I'm not going to buy it right away. Okay, we're not in the early stage venture capital. But if a company is doing it, we look at a company and say, how much money will they burn, cash burn? How much will they lose until they do better? And so going back to Paramount would be an example of where you're putting money in and losing money and starting up a business that you're going to compete with Netflix. That was early. In the case of ideas in the medical area, we don't have the notion of spending money to create a new product, a new drug. It requires more research than our firm has. So we're not as strong in looking at that. But when you get a stock like Tesla, where he's one of the creative geniuses of the last 100 years, Henry Ford and Model T in the United States, when he came out with one car, any color, for 15 years, or then in Howard Hughes. Elon Musk is very good. The problem I have is not doing the analysis. How many will they sell? How many will they make in California, Texas, China, Germany, and all the plants? And how much is the battery price coming down? The problem is the stock is selling at $500 billion. So as a result of that, nobody's going to buy it. The question is, what is he going to do outside of that? So buying Twitter, the Boring Company, SpaceLink, Starlink, and SpaceX. So he's creating he's a great engineer and a great mind, and you have to applaud people like that. You want them to be successful. Jack Ma was like that, Mayushi-san, and he invested with them. Those are things that we look at, and if we can buy them at the right price, good management, good product, willing to do cash learn, but there's a need for the product. So creative innovation. We applaud people that make a lot of money if they provide a good product and good service. So, but historically, we have not emphasized that approach in our investing. We like to find companies, some of them as simple as somebody that makes a house. There's a housing shortage in the United States. There's a water shortage in the world. There's a food shortage. So, when we look at agriculture, what's so complicated about farm equipment? Look at the population of Italy. Look at the population of Japan going down. Where are the farmers? How can a farmer sit at home with his piece of equipment and have his farm equipment go out and do the planting? How does he precision make drops of chemicals that can spot the weeds? How can you minimize the use of water? So to the degree a company like John Deere does that, and we've owned John Deere for 50 years or 40 years, and we go to see the company located in Iowa, we like that. So we look at this technology shifting in a company. A good example is, what is Sony doing with their artificial intelligence? What are they doing with their sensors? We're not buying them for that. We bought them because the stock got down to $12 and Yoshida was only the CFO, but they had good management. I'm not sure I like the financial business they bought, but that's something else.
Okay. You kind of mentioned this, but do you have any long-term investment theme that you like in a US?
That's a good, yeah. I think that, what happens is the following. It's very clear in the last 20 years that the populations of the world, the United States, Europe, Japan, China, except India, are aging. When you get older, you're going to need glasses. You're going to need hearing aids. You're going to need replacement of shoulders. So we look at body parts. Who makes spines? Who makes knees? What companies can do this with robots? And where are they? So we're looking at companies that do that. Then the question is, who pays for it? And how do you afford it? And when you have a shortage of doctors, how do we, where does the older person go for that kind of care? And so that is one of the things we've looked at for a long time. So we have a couple of analysts that cover, in quotes, and what's happening there is that companies are buying each other. And, we do have some new antitrust rules, so we're sensitive about how we play that game. Another one is what we talked about. You and I were talking 120 years ago, the populations of most countries in the world were heavily involved in farming. How do we get mechanized? Who are the farmers of the future? And how do we play in that agricultural ecosystem? How do we worry about the changing economic, social, and the climate, assuming the climate continues to change? How do we handle weather conditions? How do we create food? And so the notion of coming up with vertical farming, the notion of coming up with precision agriculture, just like precision medicine, just like precision cars are very important to the world.
So who do you like in that sector other than Deere?
There's another company. It's located at the moment in Europe called Case New Holland. But when I first started following it, it was a US-based company. Case New Holland has 1.3 billion shares. The stock is 15. So 15 times 1.3 is $20 billion. Great balance sheet. They have a new management. They're controlled by a family in Europe called the Agnellis, which owns Stellantis, which is the car company, Fiat. And will earn $1.50. I think the stock can go from $15 to $22, 50% in the next 3 years. The third one is a company called AGCO, AGCO. That one there is a little more expensive, okay? And then we have the notions of the Japanese companies that make farm equipment and so on. And we see some possibilities of mergers with Case New Holland in the United States. The other part that is important only for the next 3 years is that the United States has put in place money for what they call it, it's not a good name, Inflation Reduction Act. It's government money for capital investment in infrastructure. They have another one called the IIJA, Infrastructure Investment Infrastructure and Jobs Act. A lot of money is coming back to build up bridges. The United States has 500,000 bridges, Hutch. They're rated C minus, as though you're going to college and you get a grade, a C minus. That means they need help. Not good. And so the amount of money going into bridges and roads, and then so over the next 3 or 4 years, those companies are getting a benefit. For example, the Japanese companies, the American companies, the European companies are coming to Las Vegas because they have every 3 years, and they didn't have it in the past. Next week, I have 2 of my analysts are going because they have what is called ConExpo 2023. I just had an analyst go to Barcelona for the World Communications Conference, listening to what's going on in 5G. So these are things that are constantly evolving that we want to connect, read, and managements are learning how to deal with inflation. They're learning how to deal with part shortages. They're learning how to deal with pricing, and unfortunately, a recession, possibly. So we think this is a great opportunity, but you got to think 3 to 5 years out. How much can I make if I do nothing but buy an index fund for the next 10 years? How much can I make if I buy individuals that come to work every day and try to do a disciplined approach to finding and creating value for us? And that's what we do.
So who are the beneficiaries of building bridges in the U.S.?
Those are companies that have the cranes. Those are companies that if I'm the contractor, I basically want to rent my equipment because I like that. So there's companies called United Rentals, Herc Rentals. There's a company in London that we follow called Ashtead. The rental business in the United States is about $65 billion. But then they buy their equipment from people like Terex, Manitowoc, and so on. And so then they have the steel, and then they have the cement. And the cement companies are interesting. And there are only a few of them. They're also very polluting. So you got to find the ones that have already spent the money in CapEx. And then if you do that, you need to have what they call rocks, the gravel, and those that have the mine. And you can't go that far. So you want to have these pits for gravel located within 100 miles or so of where they're needed. So that's an ecosystem for the infrastructure. We had a train derailment the other day. This has happened. There was another one somewhere else in the world. You know, we like to have mass transit, but you got to be practical. You got to repair the stuff. So who makes the rail cars? And those are the things we think about. Then obviously you got the financial system, and you got the banks, and then you got the insurance companies. But right now, I'm just focusing on a narrow segment of what we do. You know, every so often, somebody comes up with a new drink. Somebody comes up with a new soft drink. Somebody comes up with a product that is in a can as opposed to a plastic. You know, they want to get rid of plastics. Who can do that? Who makes the aluminum cans? Which companies? We have 3 or 4 that we like because they're substituting cans. The problem with a can is that it's not as easy to snap it up and drink it the way you can do a bottle, but glass and recycling of that. So there's a lot going on.
Mm-hmm. Is reshoring into the US, is that a big theme as well?
I would say that you have to determine 2 things. What is the word that we used in Japan, Keishan, just in time, Kaizen? When you talk about getting the factory right away with the part so that you don't have to build up inventory, that I think is changed. They're re-examining the just-in-time inventory. They're examining a second source of suppliers. They're examining how long it took to go from, you know, the port in Shanghai, let's say, to the port in California. And then how do you get it, or from the ports in Japan, I'm thinking of it, what is it, Yokohama or whatever, to the United States. And then you say, how long does it go by rail from the port in California to my plant in Milwaukee? So they're looking at things like Mexico. Mm-hmm. There's some political uncertainty, but the labor costs are lower than in China. Some parts of Mexico have good access to facilities. So the auto industry relocated lots of factories there. I don't want to get into this union, non-union, but a lot of those factories are non-union. And so you know, labor, however, direct labor in car manufacturing is down about 8% of the cost. It's not a big number anymore. So but your logistics, Kaizen was just in time is changing. And so reshoring is an element of that. You know, think about all the Japanese car companies are located in Tennessee 30 years ago or 20 years ago. It's already been going on in the auto industry. We then obviously, I'm not talking about politics, I'm not talking about taxes, obviously, and the movement of capital. It is what it is. We deal with that.
I understand that you're still present at the morning analyst meeting at GAMCO. What do you like about, you know, in the world of investment?
Well, I like to go visit companies. Like I would go to visit our office in Tokyo. You know, we used to do it once every year. Now it's once every 2 years, but in the last 3 years, I haven't done it. We go to Europe twice a year. You know, I have been there only once, and we're going back. And then we go to places like Pittsburgh and places in the United States where these companies are clustered. Our analysts, we tell them to come in at 8:15 in the morning. It used to be 8 o'clock, 8:15, and tell us what did they learn by visiting companies. So tomorrow, we will have a meeting at 8 o'clock or 8:15 and lasts until 9 every day. And we have somebody talk about what happened today, but what is the implications for the future. So from my end, I tell students that if the world, you know, and I don't have to tell that to your viewers, there are parts of the world where people are saying we don't have to work as hard. You know, I tell them it's not complicated. You want to make money for the customer, you want to make money for yourself, and you want to make money for the firm in that order. So Monex, in your case, is third in the list. Don't tell that to your boss. But independent of that, I tell them that's my order. And so I expect them to work from 5 in the morning till 9 at night, not from 9 to 5. It's a different culture. You saw some of that when you were at Salomon Brothers. I saw that for the last 50 years in Wall Street. The world is changing, you know. Yeah, the remote work is very hard to have people understand the culture of an organization.
Can you please give our audience some advice as to how to become more successful investors?
Yeah, I think I want you to go in and take a tiny, tiny percentage of the money in their pockets and go play pachinko. No, the point I'm going to make is fairly simple. This is not a game to invest to earn a return daily. It's an investment. You want to buy. Japan has great businesses. America has great businesses with great managements, and you want to hold them for a period of time. And sometimes they go up and down, but don't look at it every day. I know it's very hard. So look at, if you have X dollars that yen that you can put into an investment portfolio, how much will it be if you do 2% a year, 4%, 6, 8? Now, you had negative returns in Japan for a long time based on currency, but over the next 10 to 20 years, it is the compounding that's going to take place is very good. How much should you have and worry about currency? How much should you have? But don't, it's not that complicated. You buy a diversified basket of companies that are well managed and at reasonable prices, and you're very fortunate. In this market pullback, this is an opportunity to start putting some of the money to work, thinking out an extended period of time. If you want to trade daily, I'm not the person to talk to. I can do that, but I don't want to do it.
Right. Think long term.
Invest long term.
Invest long term.
But also, think about, how do I learn about what sectors to buy? Do I want to buy commodity-driven companies? How much of my money do I want to put into stores of value like gold? Should I own oil? But more importantly, how about the companies that have products and services that work? Go to the supermarket, see what else is new.
Right. So what do you think are some of the typical mistakes investors make?
They listen to what's going on every day by the moment. They get very short-term oriented. And because of that, they get excited when the market goes up, get very concerned when it goes down. So they have to look at themselves in the mirror and say, what am I influenced by? And how much money do I need 5, 10 years or 15 years from now? And how much am I going to get? From where am I going to get it? So it's just a self-analysis. But the biggest challenge for an individual is to go to have a drink and find out that people are not doing well in the market. On the other side, going to the bar and finding out, not the bar, whatever. It's going somewhere and saying, oh my gosh, look how much money I made trading. Just look at your own P&L and balance sheet. And if you want to kind of have a little surge, take a tiny amount of money and go play some sporting game. But don't invest that way. That's my approach to investing. And this is what I've done for myself and do for clients. Just understand their culture and their habits and how they get excited when things go up and pessimistic when they go down, and just try to smooth that out. Hutch, that's the way we do it.
Now, what are your thoughts on the long-term perspective of U.S. economy and U.S. stock market?
That's, from my point of view, we are now in 1923, 100 years ago. So go back. During that next 100 years in the United States, first we introduced taxes. Secondly, we had a great economy in the 20s, a Great Depression in the 30s, world wars, inflation. And if you bought an index fund, you would have made 8 or 10%. If you go to 1927, which is the year in which I have the data, you have that kind of return. I believe that the Dow Jones, when I started the business I was started in 1966, but I started my firm in 1977. The Dow Jones was 1,000. Today it's 33,000. During the last 45 years, you had all sorts of things go up and down in the world. We had a lot of presidents in the United States that were okay, a lot that were not so good. Independent of that, you made 8 or 9%. I believe you'll make 6 to 8% over the next 45 years. So the market, the Dow Jones, will be 1 million. Now, I'm going to be old at that time. But the point I'm making is that the next generation that you can leave your wealth to will appreciate that. So I think that over the next 3 or 4 years, it's going to be a little bit of adjustment to the amount of money we threw into to overcome this problem. We're assuming that the geopolitical issues of North Korea and China and Russia and Iran, that nothing strange happens. Okay, that's your wild card. On balance, I would think that you got about 3 or 4 years of adjustments, and then what happens is that over the next 45 years, you're going to make that 8 or 9%, and but you don't want to miss it. In the beginning, there's still a chance that things can go super right. The Russians could do something, the Iranians, and the inflation will come down 2 or 3 years from now.
But long term, you make money. Hence, stay invested is very important.
Yeah, you have to basically look at yourself and say, as an individual investor, what can I do right for the next generation? Where do I want to do with my money? How much do I want to have financial flexibility as I get older? And so it's really that kind of, and that's what Monex can do for these clients. They can help them think through that. And, and then I would say pick 2 or 3 companies. I'm just going to give you Sony and kick them on, just different industries. But you can also buy one in the industrial world, and one that makes artificial intelligence, robotic equipment, and just get their annual report and read it. Okay, start understanding what you're doing. You're willing to work your ass, with great intensity to create cash flow for yourself. Just ask for an annual reports. Call Monex and say, send it to me.
Okay. Lastly, do you have any message to the Japanese retail investors that currently invest in your funds, or people who are interested in investing your funds available in Japan?
Thank you. We appreciate your trust and confidence in us, and I will work 24 hours a day, 7 days a week, 365 days plus a leap year to help you and my team stay focused on doing what we do. We're going to make mistakes. Okay, even that great Japanese baseball player makes out sometimes. But on balance, we're going to be among the best of all alternatives for you in terms of working for your money that you have worked so hard to make. And that's the message, okay? And, that's what we do. And that's what we will, and that's our culture.
Well, thank you, Mario. Thank you so much for doing this for us. It's been very
well. Thank you for having me, and I look forward to stopping by your office because Mitsu is going to take me upstairs or downstairs.
Great. Thank you. Have a good evening.
You too. Take care.